Thank you so much for joining us again this year. We really appreciate it. And for most of the afternoon, obviously, we've been talking to Canadian issuers, and now we're going to pull back and go global again with the World Bank, which is a complex and sometimes not perfectly understood institution. And you, in particular, focus on a couple of the entities of the World Bank in your financing strategies. So why don't we just sort of set the table by talking about the IBRD and the IDA, what they do, and how you help them try to accomplish their mission.
Yeah, thank you. First, I want to thank National Bank of Canada and Bloomberg for the invitation to be here. And like I said, it's the second time, and that's the first time to be able to be here in person, which is a good thing. I represent the two largest entities of the World Bank Group, IBRD, the International Bank for Reconstruction and Development, and IDA, the International Development Agency. IBRD, as well as IDA, provide funding for projects, sustainable projects in the developing countries with member countries. IBRD is the largest entity in terms of its size and as well in terms of access to the capital markets. The majority of the funding is raised in the capital markets for IBRD. We're a very large issuer. We raise on average $50 billion a year. In fact, during the pandemic, we had to increase significantly the amount of funding, the huge amount in terms of requests coming and needs from our member country, a lot of that to deal with the health, areas of health. And our funding program during that period, we funded the largest in the bank history, $74 billion for IBRD. The difference between IBRD and IDA, IBRD lends or provide funding to middle-income countries, IDA to the poorer countries. And both sustainable projects, IDA provide also concessionary funding to the development world. IBRD, or the World Bank, is the largest source of development financing in the world. In fact, over a 70-year history, largest source of development finance and largest source in terms of expertise to those countries. We raise funds in the capital markets across various markets, Canada being one of the key markets. I actually have a soft spot for Canada. I studied in Canada. I always say Canada is very cold, although that's probably different today. I see how cold New York is. I say Canada is very cold, but the people are very warm. I used to cover Canada as a funding officer before I became head of funding. It's an important market for us, but we raised on average in the Canadian market at least a couple of billions of dollars for IBRD. We have issued, if you could say, in the last probably just 10 years, over $20 billion. There was one a couple of years ago, we were able to even issue $5 billion in the Canadian market. It's an important market for us, and the core goal of our funding program is to be able to diversify our funding sources. So we raise funds globally. The largest currency, because it's the deepest market, is the US dollar market. We also raise quite a bit of funds in the euro market, and that's where we could get depth in terms of duration, in terms of maturity. And that's important for us because we want to also be able to reduce the refinancing risk in terms of our balance sheet. So we tend, you'd see us probably in Canadian dollars, Australian dollars, New Zealand dollars, as well as the US dollars, maybe issuing up to maybe 10 years. That's where we see the depth in the market. But for euros, we've done 15, 20. In fact, we've done as long as 40 years. So in terms of product for investors, we offer a wide range of product. Currencies, we issue on average 20 currencies a year, in fact, 20 to 30 currencies a year. We're a very flexible issuer in that regard. We want to be investor-driven. We want to be able to provide products that meet investors' need. And that's one of the reasons we also do a lot of reverse inquiries. We tend to do a lot of private placements as well. So this is the core in terms of really diversifying our source of funding. For IDA, IDA is relatively new in the capital markets. It's not a new entity. It has been around for over 60 years. But in 2018, IDA was always 100% equity financed. And in 2018, the shareholders wanting IDA to do more, to be able to leverage that amazing amount of equity it has accumulated over the years, decided that we should get IDA rated, just like IBRD, and go to the capital markets to raise funds for IDA. It was IDA's first transaction, and it was in the US dollar market. And so the idea was really to have this slow buildup of IDA, and here came COVID. So we had to significantly ramp up the IDA funding program from just over $2 billion to $10 billion a year. Even from between now, 2018 and now, we have raised $30 billion for IDA. So unlike IBRD, IDA, has only been in a few markets, 5 markets so far. The idea is to really continue to diversify that source of funding for IDA. So I hope that gives a flavor in terms of the difference between the two entities, and the focus is on development, is on impact.
Right. So let's talk a bit about use of proceeds, because one of the appeals for investors, certainly part of the pitch, is the impact that the dollars can potentially have. How do you guys define investing for impact, and how do you enforce it to make sure that it's having the impact that the government's ultimately in charge of the money say it's going to have?
Yeah. And that's important. The World Bank, in terms of impact, positive impact, it's really, if you look at the DNA, it's in the DNA of the institution. It's both a social institution, if you look at, and also if you look at in terms of the environment, in terms of the project that it finances. It finances projects, sustainable projects globally, and I believe personally it's the best impact investment that an investor could get. You know, you could get a good return, a positive return, and yet still have this amazing impact on so many lives. I always say you could do well and do good at the same time. You also get an instrument that's high quality, it's a AAA asset, solid. If you look at in terms of the history of the institution, have been AAA for 70 years at least, and you get a strong, liquid instrument, but yet still you get the significant level of impact. You know, we finance projects across, whether it's on health, education, you know, gender, environment is key. In fact, our mandate was just to increase the fact, to recognize the fact it's not just reduce poverty, but reduce poverty and a livable planet. So you get both the social part of it, and you get also that environment. Every project that we finance, you talk about how do we enforce this. Every project that we finance, we screen for both social and environmental standards. 100% of all the projects we finance go through an environmental screening. We're able to work with our member countries. They agree in terms of their own internal priorities. And we also match that with the bank mandate. The bank's also priorities. And we finance projects within that envelope. If you look at in terms of simply just data, in terms of the amazing reach, from an impact perspective, that the bank, if you take, for example, IDA, we look at, say, probably over the last 10 years, funding from IDA have allowed access to essential health care for about 1 billion people globally. You look at in the case of clean water, it has been able to allow for access to clean water to over 140 million people. Education, which is important. Funds from IDA have been able to finance training teachers or hiring teachers. Over 14 million teachers have been trained through that program. So when you talk about impact, this funds is really reaching to people and really making a difference. And not just impact, I think I need to correct myself, positive impact that IDA, IBRD have been able to in terms of the sustainable project that it financed globally.
All right, let's talk a bit about the current investment environment. Obviously significantly higher rates than we saw even a year ago, certainly 2 years ago. Quite volatile rates. As a AAA issuer, what are what sorts of challenges does that present for you, issuing and then trying to deploy into emerging markets?
Yeah. Every time there are challenges, there's always opportunities. Yeah. For us, obviously, with the increased interest rate, let's start from the funding side of things. The increased interest rates, obviously, it allows us to provide certain products that we're not able to provide during low interest rate environment. You'd have the ability to provide products that because you have a higher interest rate, you're able to maybe able to buy optionality to enhance the yield of certain products. You're not able to do that in a low interest rate environment. In a higher interest rate environment, it also provides the ability to provide funding or attract retail investors in particular, because they're seeing higher returns, and we have been able to do some deals in that regard as well. The higher interest rate on the other side of it, like you said, and even if you look at, for instance, before I go on the negative side of it, on the positive side as well, there are certain products with inflation that we weren't able to provide, like total return products. You've seen more interest and more demand for that. But in the low interest rate environment, what we were able to do is that we saw a lot more investors going further out the yield curve. And for us, trying to increase the duration of our portfolio, reducing the refinancing risk is important for us. So our ability to be able to issue a much longer bonds, we saw an increased demand for this. Now that interest rates are higher, some of these investors do not have to go so much further out the yield curve to be able to achieve a certain target return. We still do have, investors that need duration. Pension funds, they still have investors that need duration, but we've seen a fewer investors participating in those long-dated bonds. On the investment side, in terms of our investment in developing country, obviously, if higher interest rates, this is a concern. High interest rates increases the cost of debt, and debt sustainability is a challenge, is an issue for many of the developing countries, or many countries, not just developing countries.
You mentioned going to retail issues. I think you did something in euros recently.
Yeah, in Italy.
In Italy. Why bother with the retail market? I mean, it is labor intensive. You have enough institutional demand, presumably, to meet your needs. So why do it?
Retail? No, as I mentioned in the beginning, the key for us is to diversify our source of funding. Retail, interestingly, provides significant source of funding. I give you an example. If you see probably just this year, more recently, you see some massive retail trades done by some of the government, 20 billion plus in Europe by Belgium. You see other European governments issuing the retail market. The dynamics in some of those countries are different to that of the U.S., where retail investors are more equity focused. They're more equity, they buy more. In some of those markets, and we're not just in Europe, we also issue retail, significant amount of retail in Asia, in Japan in particular. So there's a massive source of funding. Retail have been investing in World Bank bonds through the pension funds, through the asset manager. So accessing that huge pool of money is actually really, I think it's important for us. And it's also important that retail investors, we own by 189 countries. Those countries have different constituents, which include that's the retail investors. Our ability to be able to communicate our message to retail investors is also very important. And just look at it, we have the ability, my VP said, connecting people with people. The money that we raise go to helping this child go to school. So that connectivity, I think, is also fantastic as well.
We've heard from some of the other panelists today about investors getting more demanding in this environment. Obviously, they can demand more. from issuers. What are they demanding from you?
Well, we're happy. For us, we're investor focused. If there's anything that you want to the investor in the room, please do so. We're happy to be, we really want to be investor focused. I'm not just saying that. It's important for us. And a lot of the things that we do is driven by that. One of the things that we've seen more recently is really a focus, obviously, on ESG, a big focus on ESG, and a focus on information and impact. People want to know that bond that they bought, that money that they put into the World Bank, where's that money going? So we have taken that information, we have taken that feedback, and what we have done is that we're producing on a yearly basis what we call an impact report. We started with a green bond. We were the first issuer of a green bond in 2008, and we have modeled the report looking at more a holistic approach of the balance sheet, not just green. So we've been able to provide investors with a lot of information on the impact that the dollar is having in those countries. We have one of the things that we do, in fact, more recently, we had with the exchange, with LIBOR going away, we were able to provide investors the opportunity, particularly retail investors, the ability to exchange their bond. So we did the first exchange offer. So investors had the ability to bring in the bond, the LIBOR bond, and get a SOFR bond. So we're investor-driven. We provide a buyback program to investors to be able to provide a liquidity backstop. So if they go to, we expect our dealers to provide liquidity in the bond, but to have 100% guarantee that they will provide liquidity to investors, we also provide that backstop. So for us, we're investor-driven. So information, there's huge demand for information, huge demand, as I say, for impact, and that's what we're there for. I see my colleague Hicham is smiling in here. This is what we're there to be able to serve investors in that regard.
Before we wrap up, the IDA has not yet done a Canadian dollar issue, but that is, I guess, on your timeline. Potentially, what has to happen before you tap the Canadian dollar market for that entity? Yeah.
For IDA. Yes, what we have done so far, we have issued bonds for IDA in 5 different currencies. We started with dollars, which you said is the deepest market. We went into euros. In fact, the majority of IDA funding is coming from the euro market, over 70% compared to IBRD. We've gone into sterling. We did SEK, Norwegian kroner, so we've done 5 currencies. So the idea is to really continue to expand the amount of the currency mix, the product mix that IDA offer. And this next market, which is obvious to us because Canadian dollars is the top 5 markets in terms of funding, a source of funding for IBRD. So we're working to take IDA into the Australian, Canadian, and New Zealand market. So we're working on the documentation because when IDA was first set up, it was set up as a trust fund, not to access, it wasn't intended to access the capital market. So now the decision has been taken for IDA to access the capital market. We just need to go through the process and get the necessary regulatory treatment across all the various jurisdictions for IDA. So the idea is to be able to expand the number of currencies, increase liquidity in those currencies that we've issued before, be able to build a full yield curve for IDA, and certainly Canadian dollars, like I said to you, is dear to my heart. We will be issuing, hopefully, we'll be issuing in the Canadian market for bringing IDA to the Canadian market, and we hope that IDA will get a great reception from Canadian investors. And I'm thanking them in advance.
All right. In the few seconds we've got left, is there anything you wish to add?
No, I just want to say thank you to all the investors that support the World Bank, support the World Bank mission. I've spent my whole career at the bank, and I believe in the bank, I believe in the institution, I believe in terms of the positive impact that the institution does. We have a new president now, and we're trying to really expand some of the stuff that the World Bank is doing, expand the bank reach. And I just want to be able to say a big thanks to investors for supporting the World Bank noble mission.
Thank you for being here today.
Thank you.